Okay. So in our last class, we were trying to look at the computation of company income tax, because I remember that we were done with our capital allowance computation, just for us to compute. And I remember I was also telling you that for company's income tax, if the company is not a group, allied company, the company will not be, their capital allowance will not be prorated. If it is a allied company, the capital allowance will not be prorated. However, if the company is a trading organization, their tax should be what? Yeah, their capital allowance should be prorated. That was what we talked about in our last class. That was what we talked about in our last class. So that is that. So let's quickly solve that question and we'll move on to the next thing that we need to do today. So computation of companies' income tax for 2024, 2028 years of assessments. So in 2024, you remember the company commenced 1/4/2003, and they have the accounting year to be 30th 9 annually. So our assessable profit that was given this question is how much? And the last question we're doing. And the last question we're doing, the one we have in our notes. So it was 3 million. 359. The one we did last week, 060. The question we did last week, that person that asked the question. So capital allowance. How much did they calculate for the year last week? For the year, how much was the capital allowance? You were not writing notes. Nobody's responding to me. Can you hear me? Can anyone hear me?
If capital allowance we did last week now,
yes, now it's continuation. They now said you should compute company income tax. Yeah. Wow. And everyone just kept
gather ourselves.
and everyone just kept quiet.
Because we don't understand what you are saying. We did not do
in our last class.
5117021.
Look at the question. They said compute the capital allowance by the company. After that one, they said balancing charge. After that one, they said compute the tax liability for the company. In fact, even if I didn't see balancing charge. So let's quickly compute the balancing charge somewhere. Balancing charge. What was the formula for computing balancing charge?
Sales minus tax written down value.
Sales proceed. How much is sales proceed? How much did they sell this asset? They showed it for 18 million. Abby, when we dispose the asset, what is the taxing now value? Disposal taxing now value. What's the taxing now value we had on that building when we're disposing it? This class is too quiet today. What's happening?
Sir, sorry, I'm looking for the question and I didn't write in last class.
So is that the way you guys do? You don't write in class. This is more or less like
8613
uh-huh. 8613
87.
What's the variation? How much?
Nine three eight. 6121.
So this is our balancing chart. But you remember, I said we must always check. Balancing chart cannot be more than total allowance claim on the assets. So how do we get total allowance claim on the assets? I said you say your total allowance claim on the assets is cost of acquisition. How much is our cost of acquisition? 12 million. Zero 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 760. Right? Let's start with now value at disposal. 8 million. So this will be total allowance claimed on disposal. So give my value. What do you have? What do you have?
338.
Uh-huh.
6881.
Remember, we said our total value, total balancing charge cannot be more than total allowance claimed on the asset. By implication, therefore, my balancing charge shall be restricted to the total allowance claimed on the assets disposed, which is 3 million. 38. Who is that? Who is helping me to carry it? 386,881. So this is what we're going to use as against this. Why? In my last class, I told you that your balancing chart cannot be more than total allowance claimed on the assets. Okay? So that's that. We'll move on.
Hello, sir. Sorry, sir. Please,
Thank you.
how did you get that tax written down value at disposal, that 8613? I can't find it in the question.
Who is that? Bukola?
Yes, sir. Good morning, sir.
Okay. On there. So, in our last solution that we did, Did you have that solution?
Yes, I have it.
So when you go to your question, you will notice that you have under your 2026 thereabouts, when the asset was disposed, you will see that we terminated the asset there. We said disposal. Do you see that?
Yes, sir. Disposal.
So
Yes, sir.
that last tax return value is what we are using now.
Okay.
Do you understand?
Okay. Yes.
Good. So in 2024, what is our capital allowance that we calculated? How much is our capital allowance calculated?
5,616,021.
5,616,021. Confirm? Guys, you are not responding. I'm not feeling this class. Are you confirming this figure? Oh, Jesus Christ. Olamide.
Yes, sir. I'm at work, sir. I'm at work.
That's why I cannot confirm number. Yeah, your own. Emmanuel, Okeme, confirm that number. You were in my last class. Which is rely on network.
It's 5117-021.
Okay. 5117.
021.
Please, someone should confirm that.
Yes, 5117.
Correct. 5,117,021.
021. Okay. So what we now do, because this is a trading company, we are assuming it's a trading company. So if you assume it's a trading company, we said your capital allowance cannot be more than 2/3 of the accessible profit. Okay? So if I say relief for the year now, if I say 2/3 multiplied by this, by my accessible profit, what do I have? Someone should give me the figure.
2239.
You said?
2239373.
Can someone confirm that number? I don't trust Emmanuel.
It's correct.
Okay.
It's correct, sir.
So that means you cannot take more than this for this year. So carry forward. How much are we carrying forward?
77648.
Yeah. What do you have? 2.
77648.
Okay. I'll bring this one here. 2, 3, 9, 3, 7, 3. Oh yeah, give my variance. My variance will be total profit. How much?
19687.
Company income tax at 30%. Tertiary education tax at 3%. This one is of total profit. Oh yeah. So 30% of your total profit is what?
335906.
Okay. 3% of your accessible profits.
100,772.
3% of this. 100.
772.
Can someone confirm that? 3% of accessible profits.
Correct.
Correct.
Yes, sir, it's correct.
Okay. You say it's correct. We'll move on to the next one. In 2025.
Sir, it's not correct to
Oh,
3%
of accessible
or
profit.
is it of the of the total? Okay, it's correct. Sorry, mistake.
Baba don't high. So the next one. Accessible profit. How much accessible profit? How much is the profit for that period? So 3,908,620. Capital allowance. So brought forward. How much are we bringing forward? We are bringing 2,877,648 for the year. You go back to the board to your computation the last class. What do you have for the year?
Two six zero three.
2603815.
2603. Abi,
Yes.
that's for the year. If I say 2/3, we'll do for the year. If I say 2/3 multiplied by this, it will be more than the addition of these two, isn't it?
Yes.
Confirm? If I add these two together, it's about 5 million. If I say 2/3 of 23 million is more than the addition, so I will relieve everything. So add these two together for me. What do you have? What do you have?
54.
54,814,630.
81463.
Carry forward. Nothing. 5,4,8,1,4,6,3. Total profit. How much?
18,427,157.
1.
18,427,157.
So company income tax So how much? %30 of total profit. What do you have?
That's 5 million,
5 million.
528, 147.
5 to what?
5528, 147.
Okay. At 3% of accessible profit, 3% of this guy. What do you have?
One 65844.
The next one. 2026. Accessible profits.
Sorry, sir. Please, can you show the accessible profits for 2025 again?
The 3% is not correct.
Yes,
Okay.
the 3% is not correct.
717,
It's 717,258.6. So
259.
that'll be 259.
717.
17259.
Thank you.
Please, can someone share the question, the page, on the study pack?
It's in the group.
Page
It's in the
one.
group already. It's in the group already.
Are you on the group?
Yes, I am. Let me check it now. Thank
If you are there, I'm there.
Yeah, I'm not on the group. Oh,
Who is that?
in me do.
Why are you not on the group?
Mm.
Have you paid?
Yes. Oh, is it advanced tax?
Mr. Hussein sent it last week. Check it. Mr. Hussein sent it in PDF.
Okay, okay.
Yes. During the course of the class, he sent it.
If you are there, I'm there.
Yes, sir, we are with you.
So how much is the accessible profit?
It is 32,565,940.
36 million.
No, 32. 2 million. 565,940.
940. Capital allowance. For the year, there is no profit again. So how much is for the year?
1,035,000.
1 million Which,
103,
are you sure it's
750.
1 million or 11 million? Can someone else check?
Okay, it's 10,358, 750. 10,358, 750.
And
Hello, sir.
yes,
Yeah, so, sorry, in 2026, I think we are having a just balancing charge.
in 2026, thank you. So let's go. Before capital allowance, you bring in the balancing charge. How much is our balancing charge?
Three, three, eight, one.
33861.
No, 86881.
Which is what we calculated here.
Yes.
3386881. 3386.
881.
Abi? The next one, we bring in our capital allowance. For the year, there is no brought forward for the year. So how much is the capital allowance for the year?
10,385, 750.
10,
385,
5.
750.
Now, if I say 2/3 of the accessible profits of this is still more than 10,385,760, right? So we don't need to restrict it to 2/3 again. I'll just say we leave for the year 10,385,750. But if you are in doubt, you can just take a calculator and say 2/3 multiplied by this value. It should be more than this. So what do you have when you do that? What do you have? You guys are not responding, no.
21,710,000.
Thank you. You see that we don't need to restrict this. But if it is more than 21 million, we will restrict. So carry forward. How much? Nothing. So
Nothing.
relief for the year 10,385,750. Total profit. How much are total profits?
That's 25 million.
25 million.
567,071.
25, 567,
071.
071. Did you add these two together and subtract this?
Yes.
Yes. Yes or no?
Yes, I added the 2.
Good.
Then less that.
All right, yeah. So On that, we will calculate our company income tax at 30% and our tertiary education tax at 3% of our zero profit. So I'll give you my value.
So 30%, that's 7 million. 70121. Sorry, sir. 7,670,121.
Okay, hold on.
7,670,121.
Okay.
Yes, sir, like that. Then the
So
3%, the 3% is 976,978. 976,978.
yeah. So the next one. The next one. 2027. Accessible profits. How much is accessible profits?
22,565,940.
22 million.
22,565,940.
5, 6. Oh yeah, 5, 6, 5, 9, 40.
No, that's wrong. You are
Okay.
giving him the value for 2026.
Give me the value.
15,454.
15 million.
15 million.
15.
454,000.
We have not used 22 now.
You have used this. Look
The
at
last
it in
one we
2026. Look at it 2026 now. You gave him the value for which?
2026 is 32. See it now,
Sorry.
32,
Sorry.
not 22.
Sorry.
Okay, I'll give you now my value.
Mabin, sorry.
Abinu. Give him the value.
Okay. 22,564,940.
22.
22.
565,940.
Okay. Capital allowance. How much is capital allowance? How much is capital allowance?
For the year is 3,170,615.
Oh, sorry. The year. $3 million.
170615.
Relief for the year. Everything. Forward. Nothing. So, $3 million. 175. So carry forward. Nothing. What's my total profit? What is total profit?
19,395,325.
On that, I'll calculate my company income tax at 30%, accessible profit at 3%.
The 30%, that's 5,818,598.
3%.
$676,978.
So, and so on and so forth. You can do the rest. Let me just quickly take your mind back to if this company were to be manufacturing company, what would have happened in the first year? If this company were to be manufacturing company, I would not have restricted my capital allowance in the first year.
Yes.
So I would have taken this is the scenario that would have played out. So my accessible profit is 3,359,060. My capital allowance, which is capital allowance done, accessible profit for the year is 5,117,021, right? So instead of saying 2/3 of this, I'll just say relief for the year is a manufacturing company now. I'll just say 3,359,060. I'll remove it. Carry forward. Do you understand me? So in this year now, I will not have any profit to carry forward to tax. So my total profit will be nil. So in this regard, I am going to have company income tax at 30%, which will be 0, nil. But my tertiary education tax will still be on my accessible profit, which is this. Do you understand what I'm saying? So in that regard, this we are not going to carry the balance here forward. Carry the balance forward here. So what are we carrying forward? Give me my value. What are we carrying forward? Olamide.
Yes, sorry, please,
First
where did
figure.
we get 3.35906 from?
That is a accessible profit because we are not going to restrict. You get, unlike
For
when the
2028.
company was a trading company, we said you are going to restrict the capital allowance. to 2/3% of to 2/3 of our stable profits. But when the company is a manufacturing company, you are not going to restrict the capital allowance. Okay? So, and that is why we just took the stable profits directly and remove it from the capital allowance.
Okay, thank you, sir.
All right. So what is my balance? What am I carrying forward?
That's 1,757,961.
757.
961.
So when I get to my next year, which is that one that has 23,065 as my accessible profits. Capital allowance for the year, or brought forward rather, we are bringing 1,757,961 forward. Unlike the last time that we brought forward this to this place, look at what we are bringing forward. This. So, but capital allowance for the year is 2,603,815. Okay, because the trading company there is no restriction. So, relief for the year. What do? We add these two together and relieve it against the profits. So my total profits is what? So I'll bring, what's the addition of these two?
That's 4,361,776.
4,361,776. Okay, so that's what I will bring here. 4,361,776 in this one. So if I subtract everything, it should be
19,546,844.
this should be dash. This is 4,3. I'm coming.
Okay, sir.
So what would you have as your balance?
That's 19 million 546,844.
So you continue like that. So you can see the difference between where a company is a manufacturing company and when the company is not a manufacturing company. So they are different. The difference is that in a manufacturing company, you will not restrict the capital allowance. Meanwhile, for trading company, the capital allowance will be restricted to 2/3 of their stable profits. Okay, so that is that. Any question? Any question? Any question? Okay, in the absence of no question, we'll move on to the next subtopic, which is capital allowance. Capital allowance for a going concern business. When we say going concern business, what do we mean? We are referring to a business that has been existing for so long, and this business does not have the ambition of liquidating, or this business does not also commence, they are not just commencing operation. So that means they have been existing for so long. And in that regard, if a company has been existing for so long, that means such a company is in its fourth and subsequent years. Fourth and subsequent years from commencement. You remember when the company commences operation, we said the company shall be assessed with tax from the date of commencement to the end of the first accounting year end. Abi? end of the first accounting year end. We said the second year will be a day immediately after the end of the first accounting year end to the end of the second accounting year end. We said the third one will be a day immediately after the end of the second accounting year to the end of the third accounting year end. Right? So, if that is the case, that means the first to 3 years is an abnormal situation, even though finance has come to rectify that issue. But when you now say the fourth and subsequent years in our notes that I gave you before now, I told you that the fourth and subsequent years will be assessed to tax from on a preceding year basis. Do you remember? Fourth and subsequent years will be assessed to tax on preceding year basis. If that is the case, if the company is going to be assessed to tax on preceding year basis, there could be a situation where the company had also acquired assets, and the asset this company had acquired, they have now been subjected to capital allowance before you are given the information. Now, in that regard, so the examiner will only give you taxable now value of the assets. They will tell you the number of years remaining. They will give you a remark. Let's say, for example, we have land and building as the assets. Land and building as the assets. Assets or QC. Let's say we have land and building. They gave you a taxable value of 100 million, and they told you that the remark they gave, they said 2 years gone. If they said 2 years gone, what does that mean? That means 2 years has been used out of the what? Entire useful life of the assets. So the value that you have here represents the remaining number of years that the asset is supposed to be used for. Now, how many years do we calculate capital allowance on land and building? How many years on a normal day? Who is answering? How many years?
10.
10 years, good. That is on a normal day. We calculate it for 10 years. But they now told us that 2 years gone. What does that mean?
Remaining 8.
Many
Remaining
8, 2 years have been used.
So for you to calculate your capital allowance here, the cost is only going to be annual allowance. So your annual allowance should be calculated as tax-free now value divided by n minus x. What is your n? Your n is in useful life of the assets. While your x is the number of years already used or utilized. So in this regard, if I want to calculate my annual allowance now, I'll just say 100 million divided by 10 minus 2. And we have 100 over 8. What is that? That's 125. What's that? 100 over 8 is what? Hundred over 8 is what?
12,500.
125,000.
So 125,000. So this will be your annual allowance all through the year, all through the useful life of the asset. Imagine they told you in your remark that 2 years expired. What does that mean? 2 years expired. What does that mean?
It's not the same thing that they've used 2 years before.
Good. 2 years has been used. If they say 1 year gone,
9
what
years.
does that mean?
They have used 9 years.
They have used 1 year. They have
Like
used
you
1
want to mean 9 years.
remaining
Okay.
9 years. If they say 3 years remaining, what does that mean?
7 years have
They
been
have
used,
used
remaining
7
3 years.
years.
If they say 4 years unexpired, what does that mean?
6 years remaining. Sorry.
They have used
They have
6
used
years,
6 years, remaining 4
4
years.
years remaining. Do you understand the dynamics?
Yes, sir.
Yes, sir.
That is how the examiner will always put their question when they want to test question on capital allowance on a going concern basis. Okay, so let's look at your study pack. We can see a question on that. If you are there, I am there.
Sir,
Your
sorry, I did
combined,
not ask here where you said that we should go to, sir.
your study pack.
Mm.
I'm looking for capital allowance. Go to page 236 in your study pack. If you are there, I am there. Look at question number 3.
Oh,
Can you see question number 3
yes,
on
sir.
page 242? So can someone read the question for us? Can someone read the question for us?
Question 3. You are given the following information on the residue of assets of Nengi Backness Nigeria Limited for the year ended 30th September 2025. The figures are correct. Disposal. The motor vehicle I was sold for. Disposal. The motor vehicle I was sold for
I
120,000.
was so for
Motor vehicle 1.
One.
Oshejare.
Okay. Is I that is there now?
Look, you don't know Roman figure.
Ah. Motor vehicle
Wow.
1 was sold for 120,000 naira on 1st of March 2006, and the plant one for 800,000 on 1st of October 2006. Sorry. The furniture and fitting was sold in part for 65,000 on 1st of September 2006. The tax written down value of the proportion sold is 1/4 of the total. You are informed that the furniture and fitting is in part or unit required Under this, what circumstance will you refer to transfer of assets as related party transaction? B. Compute the capital allowance for the relevancy of assessment of Nengi Nigeria Limited.
What is related party transaction?
When you sell assets or when you have transactions with people who can influence your decision, e.g., wife, husband, niece, nephew, or even parent company.
Okay. Which is synonymous to connected party transaction, right? So in that regard, the asset will not be transferred at arm's length. What is arm's length transaction?
Market and at market rate.
At market rates. That is, a knowledgeable buyer and or a knowledgeable willing seller. Both of them are, the buyer is willing to buy, seller is willing to sell, and at the market price. So in that regard, the buyer does not have influence over the seller, and the seller does not have influence over the what? The buyer. That is, there is no control of either of them. None of them is having influence. None of them is controlling each other. So they are buying as bargaining. So the market price, even the market price could be a certain amount, but if I am able to bargain it down or bargain it upward, it's still market value. Do you understand me? So at that instance, there is no control. So when an asset is transferred under that circumstances, that means the tax authority would have to determine the cost of the assets by themselves if the asset is transferred to a related party, especially when the related party cannot prove that the asset is transferred at arm's length. Okay, so that is us. Now the examiner now said, compute the capital allowance for all the relevant years for Nengi. Now, one thing I always tell you to do is to prepare your asset allocation schedule. If you are preparing your asset allocation schedule, what do? So what is the name of this company? Nengi.
Nengi Nigeria Limited.
Nengi Backness.
I know you will see that. Just close your eyes to whatever you see there. Just go to Nengi. You can see Elijah. She just mentioned Nengi Nigeria Limited and moved forward. You are still saying that backness. You saw the backness. Mr. Hussein, did you also see the backness?
Back, yeah, no back.
Mr. Hussein did not see any back. Thank you, Gary. When I was setting this question, it was during the COVID when Nengi was in the Big Brother house. You know Nengi, Big Brother house. So,
yes.
So that was when I was setting this question then. COVID now, we don't go anywhere. We just the outside house. They see everything. So that was why. So
I wish the world can shut down like that again.
You said?
So I wish the world can shut down like that again.
Alaye, don't let the world shut down. We don't eat.
Population will increase.
It's too much, I bet.
Inflation will increase. We will not be able to cope this time around. We will not be able to cope. Okay, let's go.
Sorry, sir. Excuse me. I have a question.
Yes.
Sorry for taking you back. From the previous question that you solved, I noticed that in the textbook there is investment allowance.
You are using old book. Which version are you using?
Third edition.
Third edition. After that third edition, I have done 3 after that one. I have not revised third edition. I have done fourth edition. Okay, I've done 2 after that one. So,
Okay.
Okay, let's go ahead. So, as I was saying, we need the asset allocation schedule, right? So, I'll say asset allocation schedule. Now, I have told you when you are not given profit, but you are given date of acquisition or when the asset was disposed of, that will represent your year of what is it called? It represents your final year of assessments. Okay, so let's go for 2000 and this table is showing that they acquired this in 2005, Abi. So this one for 2005 year of assessments. So they sold the assets. I think that is to 2007 year of assessment. Let's go. But we know now. Now tax years. Basis period. And QC. In 2025, our base period will be 110, 2023 to 39, 2024. Abi?
2005, so 2005.
So this will be actually 2016. So this should be for.
No,
5.
I mean the tax year. The
Don't
tax
worry.
year is 2005.
The first one will be 2006, not 2005. You know why?
Okay, sir.
If you look at the year that you are given, they gave you 39, 2025. Okay, 2005.
Yes.
Okay, don't
So
worry.
it's in
Just say
2006.
2006.
Yes, sir. Okay, sir.
So 2005, 2025. So it should now be what? 2026 year of assessment.
Okay.
So all these first assets, which is motor vehicle 1, they told us 2 years more. Plants, furniture and fitting. They told us 2 years remaining, 1 year gone. Abi?
1 year gone.
So we
Yes,
know
sir.
the implication of that. They now also said there was an asset that was acquired on 11th, 1st of 11th, 2024. So that will also fall here, Abi. Motor vehicle 2, Abi.
Yes, sir.
Can you see it? This is motor vehicle 1. Look at the other asset, plant and machinery that was acquired 1/4/2005. It will also be here. Plant and machinery 2. Abi. Machinery was acquired when? 21/01/2006. So I come here. My base was 110, 2025 to 39, 2026. Will it fall here? It will fall in this period. When? Which asset is that? Machinery. Abi?
Yes, sir.
The next one. Furniture and fitting, second hand. Where will it fall? It will also fall within the first year. Abi? You can see the dates.
Yes, sir.
Abi? Furniture and fitting. Yeah. It will fall in the, I'll call it 2. It will fall in the first one. The following the first one. The next one. They now told us that motor vehicle 1 was sold for 120,000 on what date? 1/3/2026. Abby?
Yes,
So
sir.
if they sold 1/3/2026, it will fall in 2000. It's supposed to be 2027. It will fall in 2027 year of assessment, isn't it? It will fall within this period. So I will bring that motor vehicle 1. I'll call it disposal. Abby?
Yes, sir.
They said furniture and fitting was also sold. Excuse me, guys. They also said that furniture and fitting were also sold in parts. That is the first one that was acquired. But when was it sold?
Yes, sir.
When?
In 1 of
1/9/2026.
September.
Will it
Yes,
fall
sir.
here? Yes.
Yes, it will fall in
Furniture,
2027.
yes. Furniture 1 was disposed. So I would say disposal. Any other assets? None. So we are good. So by implication, we are only doing 2 years because the examiner did not tell us to do beyond that. We are only doing 2 years.
Oh, okay, sir. What about
So
the
we will
plant
now
1?
start.
Sir, plant 1.
Plant 1, Nico. The disposal of plant 1.
Plant 1.
That one
When
is
was it sold?
2008 tax year.
2028. It will be
Yes.
2028 tax year. So that will be 110. You can see 2026 to 39, 2027. It will be disposed these dates. What's that? Plant what?
1. Plant 1.
Disposal. So which one other one?
No, we don't have another one. That's
We
all.
are done. So we now say our computation will now be from 2026 to 2028 year of assessment. So I'll say, what's the name of the question, Nengi? Computation. Let me call.
Sir, please, can I ask a question?
Go ahead.
They said the tax written down value of the proportion sold is in 1/4 of the total. What does that one mean?
So we'll get there now. You will prorate it.
Okay.
You will prorate the tax written down value and take the one that was disposed, and the one that was not disposed will be left in the books. That is partial disposal.
Okay, sir.
Do you understand that?
Yes, sir.
Don't say the one number.
For 2026, 2028 year of assessment. How many assets do we have? 1, 2, 3, 4, 5, 6, 7. So what I will do, Abby, there are 7 assets, isn't it?
Yes, sir.
Okay. Let's take them one after the other. So QC Wait. What was the first asset?
Motor vehicle.
Motor vehicle 1. Next asset.
Plant 1.
Next asset.
Furniture and fittings 1.
Next asset.
Motor vehicle 2.
Next asset.
Plant 2.
Next asset.
Machinery.
And I think that's all.
No, we have furniture and fittings 2.
Okay. Any other assets?
No, that's awesome.
So capital allowance. We know the rates.
Your line is not straight. Did you use your
Yeah,
hand to do that thing?
you too. Yeah, we have to do bad thing. Yeah, we have to do bad thing.
Oh, God.
Very, very straight hand. Some of you cannot see clearly. You need glasses. Yeah, we have to do bad thing. So that is that. So in 2026, tax union value, right? So all this first one in the question, the first one that were in the question, the first assets. They told us motor vehicle. And you remember the formula I told you? If you are calculating your annual allowance, this is the formula you use for existing assets. For the new assets, you will use this minus this divided by this for existing assets. Do you understand me? So for you to calculate your annual allowance now, for old assets, you will use this.
Sir, sorry, please, can you explain the and why we are having cost plus initial allowance over N?
Say that again, Olamide.
I said that I did not get the cost minus initial allowance over N. Is that not just normal
Yes, now.
allowance?
So
Okay.
that is for new assets. You know, it's an existing company.
Yes.
So the information that we are given, they gave us information about the old assets and the new assets. So for us to calculate our annual allowance for the old assets, we'll use it. For new assets, we'll use this. Do you understand?
Okay.
Good.
Yes, sir.
So let's go. Now, for the furniture and fitting, for motor vehicle, they said 2 years more. 2 more years. What does that mean? For
That means
motor vehicle usually use how many years from this rate? It's usually use 4 years, Abi. So they
yes, sir.
said 2 years more. That means this 1.8, which is the terminal value, you will divide it by what? By 2, isn't it? So 1.8. will be divided by 2. So your annual allowance here will be 900. Next, plants. How much is the plant? 1.2. The examiner said 1 year gone. How many years left?
4.
Olodo. 1
3.
year gone. How many? 3 years. Divide this by 3. What do you have?
Okay, 3.
4. You have 400, right?
Yes, sir.
Next, furniture and fixing. They said 2 years remaining. Even it's 2 years remaining, you divide this by 2, Abi. Give my value.
It's 20. It's not 5 years.
But examiner, they will tell you 2 years remaining.
So remaining
How many?
3.
Olodo. 1 2 years
It's not
remaining.
20% divided by 100. How many is that? 5,
It's
Abi?
5 years. And they now told you specifically that 2 years remaining. That means 3 years gone.
Okay, 2 years remaining. Yes.
In fact, who is that? I want to see your face. Who
It's
is that?
Aisha.
Now my paddy. Oh yeah, it's 2 years remaining.
Sir, me nko.
You my G.
Yeah.
Oh yeah, now 2 years remaining. So you divide this one by what? By 2.
340.
340.
Mm.
You understand the concept?
Yes.
Good. So, do we acquire any asset this year again? We acquire some asset too. So, I'm supposed to start from the asset acquisition. So, let's go again. I'll delete this. Sorry about that. Because we acquire some assets. Let's start from the ones we acquired first. Costs. We acquire some assets. We didn't acquire this one. We didn't acquire this one. We didn't acquire, but that motor vehicle 2 was acquired, right? Motor vehicle 2 was acquired.
Mm.
How much was it? 2 million. Abi? Plant 2 was acquired. Plant 2 was acquired. How much is the plant 2? 1.8. Machinery 2. Was he acquired?
Yes.
That period from our table. Machinery 2 was not acquired. It was furniture 2 that was acquired. How much is furniture 2? 900. Abi? So
Yes.
on that new acquisition, you remember, you calculate your initial allowance. 1 million. Abi? This is 900. This is 25% of this. 25% of 900 is what? 225. Confirm? Yes. If I add the 3 together, what do I have? Confirm.
Yes, sir.
Confirm. Yes, good. So, in fact, we need to also bring in the tax nominal value. So that's
Citizen, this machinery is 2.9. I don't understand why you said there's no additional. They didn't purchase any machinery.
Look at our our allocation schedule. It's our allocation schedule that is guiding us.
Okay, for the year. Okay, I understand now. For that year of assessment.
I need to bring in the terminal value first. Do you get? Don't worry, we are good. Cost. We have the cost. Let's bring the terminal value. What's the terminal value for the first asset?
1.8.
1.8. Next one, 1.2. The next one.
680,000.
Good. So we can now calculate initial allowance now. Our initial allowance for this guy was 1 million, Abby.
Yeah.
This one 900. And this one nothing. This one was 235. Giving us, what did he give us that time? 2125. Now, annual allowance. They said this one remaining how many years? For the fourth month of like 1, how many years remaining? They said 2 years, 3 more years. That is 2 years
2
remaining.
more years.
Abi?
Yeah.
They said this one, 1 year gone. That means 3 years remaining.
3 years remaining.
They said this one, 2 years remaining. 2 years remaining. Divided by 2, what do you have? 390?
340.
340. But this one is new assets. We need to calculate the capital annual allowance. Abi, that will be costs minus initial allowance divided by number of years. So that will be 250. Confirm more. Cost divided by minus initial allowance divided by number of years. True. Confirm that. Confirm that. Confirm, Abi.
Yes.
This one too. Cost minus initial allowance divided by 5 years. Give me that value.
135.
So add everything together. This plus this plus this plus this plus this plus this. Add them. What do you have? That will be your annual allowance for that year. We'll go again. In 2027, our tax return value
2,115,000.
2,115,000. Add it together. You have 4, 2, 4, like this. So this will be 900, Abi. This will be 800. This will be 340.
340.
This will be 750.
750.
This will be what?
$675.
675. Come on. Hold on, 675, right?
Yes, sir.
675. So the next one is what? I don't know what's wrong with my car. It stopped working. I'm with you. I'm just trying to change the amount of my pen.
Okay. Let me check.
Get one. This is how I'm going to be buying mouth for pen. It's not right. 6,
Yeah.
7, 5.
The formation of that first annual allowance is 2,250,000. I made a mistake. It's not
Okay.
2,150,000.
Okay. Okay. Trying to see what is happening to this my pen. It just stopped working. Okay, I think I should. Let's see if I can. What do we do? Okay, let me just continue to explain it. How do I do this now? How do I do this? So we have, when you subtract this 1.8 from 900 from this, what do you have? You said you have 75.
675,000.
Did they acquire another assets this year? If the answer is yes, we'll bring it here. We'll say costs.
Machinery.
How much?
2.9 million.
2.9. Now, on that new assets, you calculate initial allowance. 2.9, 50% of that will be what?
1,450,000.
Abby, you will bring it to this other side. Now, did they dispose any of our assets? I can't actually shift my this thing. I don't know why. The pen is not working. So I can't shift it. If I try to do anything, it's just messing up. So, did they acquire any assets? Did they dispose rather in this year? Look at your question.
Motor vehicle 1.
Motor vehicle 1 was disposed. So the fact that it was disposed, did they dispose in full or in part? Did they dispose in full or in
I
part?
think this one was sold for
I
120.
think it's in full.
Okay. So what you do is to take out, you say disposal, annual allowance, and disposal. So the one that was disposed, you take it out completely. The tax return value. The next one, did they dispose plants? Did they dispose plants 1?
No.
Did they
The
see
net
the
disposal
effect?
is 250.
Okay, Thank God. Yeah. They disposed plant one in a subsequent year. So it was not disposed, but they disposed furniture and fitting. Abi,
Yes, sir.
Yes.
how much is furniture and fitting as at now? 340. You take it out, 340. Did they dispose any other thing? No, no disposal again. Plant and machinery 2. Annual allowance on that will be 225. On this one that has been disposed, no annual allowance again on it. But they've not disposed plant 1, Abi. So the annual allowance on that will be 400. Abi, is constant. So the one that they have disposed, we take them out from the books. So what is the annual allowance of plants for machinery? This machinery that we just acquired, what is the annual allowance for it? So that is 2.9 million minus 1,450. What do you have?
$362,500.
362,500. Abi, so you subtract that also. Furniture and fitting 2. Did we acquire it this year? No. So what's the attaching now value rather? Furniture and fitting 2. 900 minus 225 minus 135. What do you have?
$540,000.
540. Okay. That 540. Our annual allowance on that per annum is 135. Abi, that you calculated the other time.
Yeah.
So you bring every other annual allowance to this place. The one that you disposed, they will be out of your books. So this will be 450,000. This will be, what is the AA of motor vehicle 250? You remember. Balance here will be 500. This one on go, we have disposed it. This one will be 400. And this one to don't go. We have sold it. Abi? So, okay, I can again. In 2028, which is the last year, they told us that one of the assets was also disposed. Which asset was disposed?
Plant 1.
Plant 1. When it was disposed, what did they say? They said it was disposed in parts. Abi? They said it was disposed in parts. Now, plant 1 has a taxing down value of 400K. Abi? So they said 1/4 of it was disposed. Is that not? So they say 1/4, that would be 1/4 was disposed. That is 100. So we say 100 was disposed. We remove the 100. Abi? But again, this is the last year of use of this asset. The balance, which is 300 or 300, would also be the annual allowance for that year. But the annual allowance in the last year of disposal is always reduced by 10 naira. So you deduct 10 naira from that. So that is that. Okay.
So will the annual allowance be 2 199,990.
No,
Mm-hmm.
because it should be the assets by implication in this question. Since they said the assets were disposed in parts, that means they must have bought in parts. Okay, so we will remove 30 naira from this asset. 30 naira. Because that means the assets are 4. It's just conjoined. So you remove 30 naira from this asset. So you calculate it and you calculate your disposal. Whether you have balancing charge or balancing allowance. I think we should start the class here. What I will do is I will send you a snapshot. I will solve this 2028 and send it to you so that you can see what I've done. Because my mouse is not working now. My marker is not working. So see you again next class. Any question?
Can you send
Yeah,
the
sir,
question?
please, then.
You said?
Can you send the question too, please?
The question is on the
Study
group
pack.
study pack.
Sir, this
Can I be true, please? What year?
What year? How?
No, it's in the textbook. I
study
see
pack,
textbook.
page 242.
Page
Uh,
Hello,
240.
sir.
that
Yes.
Okay, study
Sorry,
material.
sir. Please, this 2027 disposal under machinery, how did you get that 362,500?
It's not disposal. They did not dispose the assets. That is annual allowance.
Okay. Thank you.
Sir, this furniture and fittings was sold in parts
Yes.
for 65,000. So I wonder why we're talking about plants again. I can't see where they said plants again. So we are doing to third. I don't know what I'm the one not getting it.
It's furniture and fitting that we're supposed to be talking about now. It's
Okay.
not plants. It's furniture.
Okay.
Mm.
Okay. Thank you.
Sir, please, can I call you after the class?
Yes, you can, actually.
Okay.